In today's job market headlines, a commercial real estate giant declares the RTO debate over, job seeker sentiment reaches all-time lows, and the BLS has staffing shortages. But before we get to that, this morning the BLS reported that real average hourly earnings for all employees fell 0.1% from July to August. And from August 24 to August 25, earnings are up only 0.7%. Now compare that to the inflation numbers that also came out today. August CPI rose to 2.9%, with core CPI inflation rising to 3.1%. Inflation is now the highest it's been since January. And so no matter how you look at it, paychecks aren't keeping up with rising costs. We need to see this turn around very soon. In other news, according to Bloomberg, the Bureau of Labor Statistics is running short on leadership, which is at the worst possible time for that to happen. They report that about 1/3 of high-level roles at BLS are currently unfilled, and staffing as a whole is down roughly 20%, with a lot of the veteran workers over there and data experts leaving because of buyouts. White House Taylor Rogers says, for years, the BLS has been failing America's businesses, policymakers, and families by publishing jobs reports with vastly inaccurate data. Yes, that's true. We all know that now. It's coming to light, but what is going to be done about it? I mean, if this organization is so short-staffed, how can we expect a turnaround anytime soon? Things at BLS just continue to go from bad to worse. So let's hope they can figure it out and start to modernize what seems to be a very, very slow and behind the curve organization. Speaking of things needing to get better, the Washington Post reports that pessimism among job seekers is the worst in at least a decade. This comes from an August survey by the New York Federal Reserve Center for Microeconomic Data. It showed that the job finding sentiment dropped to a record low 44.9% last month. This means job seekers are more pessimistic than they've been since at least 2013, when they started tracking this trend originally. And it's for good reason. There are more than 800,000 job cuts that have been reported this year, which is more than any similar stretch outside of the pandemic. Entry-level roles are scarce, and job postings are now back down to levels we haven't seen since 2021. So between the tariffs, policy shifts, and AI, employers just aren't hiring right now. And it's not because they don't need people, it's because they just don't feel safe hiring. And so while the number of job openings is high and unemployment is historically low, the bottom line is the job market may look strong on paper, but that's it, because it isn't at all representative of what it's like in real life, where it just isn't good right now. In today's final headline, Bloomberg reports that the RTO debate is finally over, according to office giant Brookfield. Brookfield says demand for office space is soaring because companies vastly underinvested in workspace, particularly for in-person collaboration. Brookfield is a major player in the commercial real estate space, and they made their position clear during a recent investor day. According to their presentation, demand for office space is surging again, driven by companies requiring more in-office presence from their staff. Their position is that economic and corporate signals indicate that hybrid models are being replaced by stricter on-site expectations. A month ago, I would have called BS on this. Let's be honest, as a commercial real estate investor, Brookfield is biased, so it's in their interest for everyone to return to the office. But based on news we've seen over the past couple of weeks from Amazon, Microsoft, NBC Universal, and Paramount, it seems they might be right. It appears that this is what happens when employers believe they hold all the cards. Now, I say it's a risk because the tide can turn at any time, and when it becomes an employee's market again, well, these companies may regret these strict decisions that they're making right now. So we'll have to see what happens. And in closing, our fun fact for today, the first country to implement an 8-hour workday was Uruguay. Who knew? Uruguay. In 1915, they implemented the 8-hour workday, so we can either thank them or blame them for that, depending on your perspective. So that's it for today. Thanks for listening. Please like, share, subscribe. And if you have any comments, I'd welcome any feedback, and I look forward to speaking to you soon.